What's going on? What's going on? Let me know who's there in the chat. Fast Eddie is here in the chat. So let's go, guys. I know it is this morning. Of course, good morning, everybody. But I know it is out of the normal, but I might not be able to do a live stream later on tonight. That's why I'm doing it right now. So I know I'm catching people off guard. And not many people might show up in this stream, but I still gotta do the stream because um and I gotta have my cup of coffee this morning. I'm hoping some of you guys out there. Fast Eddie is here first in the chat. Hello, Jay and chat. I want to take a look at the stock market. And then there's also earnings today. Man, cannot wait for Google. I'm hoping I'm able to get on stream later on tonight so we can take a look at the Google earnings later on. So let's see if I'm able to return back. But my daughter has a show later on tonight. That's why I'm doing this now instead of doing it later on. Even though maybe I should have done the stream later this afternoon, but I gotta go do a few things. So how's everybody doing? Sounds good. Nice, Fast Steady. Let's see where the stock market is at this morning. Let me refresh the stock market heat map, the S&P 500 for the day, and what I am seeing. All right, let's see. So I see that software is down today because you got Palantir down 3%, PANW, Palo Alto Network down 1%, CrowdStrike also 1%. I see software still down in the day. Microsoft down 1.5%. What's going on, Boogie? Good morning, Boogie. Good morning, Lynx. What's going on? So I do see the movement here in the software sector. Semiconductor and equipment like Applied Materials is down 1%. Lam Research down 1%. So that's what I'm seeing here. But I do see a lot of green over here, like in industrials, where you see GE Aerospace up 1%. Northrop Grumman. I don't know. I've never seen that company before. So it is down, it is up 3.5%. Then you have in the financial data, you got CME Group up almost 7%. Wow. NASDAQ 1.5%. Intercontinental Exchange almost 3%. Then you have, let me see what else. Farm Heavy Construction. You got Deere, Packard, and Cat. They're all up on the day. Aerospace and Defense, which was one that we were looking at yesterday. So let's go. Look at this. You got GE. What is this? RTX. You got Northrop. Oh, this is the ones that I just mentioned. LMT, Lockheed Martin. Sorry. Forgot to mention that one. Lockheed Martin is also in the green. Johnson & Johnson is in the green. Merck and Company in the green. AbbVie, Amgen, Pfizer. I don't know this one. GILD is the ticker symbol. It's also in the green. Then you also have oil and energy. You have XOM and CVX. So that's Exxon and Chevron. Then you have ConocoPhillips up 1%. EQT Corp is up 5.7%. Oxy Occidental Petroleum up 2%. That's also another one. So yeah, let me know there in the chat. Meta is down 1.5%. Wow. Google is up 0.45%. So not much in the day. Netflix, oh wow, was up 2%. We should take a look at the stock. Let me see. AT&T up 4%. Verizon up 2.5%. Amazon down 0.5%. DoorDash is down big, 3.4%. I wonder what happened there. Home Depot and Lowe's are green in the day also as well. GM, which it has been performing good. Look at this, another 5.5%, and Ford 2.6%. So let's see what happens in the day. Let me see. Soto here. What's going on, Anders? Let me see. Google is up. GOOG is up. All right, let's take a look at a couple ticker symbols separately. One ticker symbol I was just looking at is this one. SMCI is up 23% in the day. Why didn't we know this yesterday? You know, so we could have put like a lump sum in there and and made 20% in a day. Be some make a day trader move. So super micro devices. Let me see. Super micro share surge by about 15% following a strong preliminary earnings report indicating record backlog and improved gross margin guidance. Oof. So that are some those are some very good news. Those are some very, very good news. Um, the company expects margins to nearly double, 15 to 17%. So it seems like there's a lot of demand. These are preliminary earnings report. So they haven't announced their earnings yet because it's on August 11. They haven't shown the actual numbers, but it looks like they already gave like a quick sneak peek of the numbers. So that looks really good. There's probably a lot of insider buying. Am I dreaming second day in a row, Eduardo? Yes, yes. I am off, Eduardo. I am off this week. This won't happen again for like a very long time, but I am off this week. So today I am doing a live stream right now because I might not be able to do it later on tonight. I got my daughter have an activity, and I might not get home until like 9 o'clock, somewhere around there, 9:30. So let's see. Let's see what happens. But yeah, Eduardo, Northman is aerospace. I deliver their work. Employees always sitting down on or on break. That means that's a problem, right? Or I would just be careful with that, as an employee, right? Because jobs that are easier might be the ones that get replaced by AI. I do not believe that all jobs will be replaced by AI. I do not believe that every workplace is going to be like 0% humans. I think there's still going to be humans, but like the very simple, easy jobs will probably be replaced in the future by AI. But I still think we're a long ways to go for some of those jobs. But I still think a lot of people are going to have a job somewhere. Some things evolve, but some things you still need the human being there. I normally don't look at the stock market until it's been open in an hour. For an hour. Okay. Too much craziness in the first hour. Yeah, it looks like. Look at these super micro devices, super micro computer. Let me take a look at GOOG on the day. It is up 0.70%. It looks like it's ramping up nicely right there. It's at $348. I wonder what the earnings report will bring. I still think it's gonna bring a nice earnings or a nice top and bottom beat. I still think that's gonna happen, but the guidance I think is gonna be the most important. If they're gonna continue or are they gonna double down on the capex spend, I think that's gonna scare investors away, right? Let me know your opinion in the comments. But I do think that that's what's gonna scare investors away if they go ahead and say no, we're gonna increase the capex spend. Um, and I'm sure they're gonna have a good answer about it. Like backlog. I believe that there's a lot of demand out there, especially for Google. Their backlog, they had announced it previously in the previous earnings call that they had, which it was pretty large, and that's why they were spending the capex. So let's see what kind of explanation they do give. But I think the guidance is going to be the most important part of the Google earnings, because I do believe that they're going to have a beat. Estimated revenue is $113 billion for this quarter, and earnings per share $2.87. Um, so you can see Q2. Let me see Q2 of 2025. They had an actual $96 billion in revenue. Wow, that's a big jump year over year. And let me see the earnings per share. The earnings per share in Q2 of 2025 was $2.16. So if they go to $2.87, that's another big jump in earnings per share. You can see that they had a great beat on Q1 of this year. $5.11 in earnings per share compared to the $2.66 estimated. Jay, do you have a number to retire at? Not yet, Fast Eddie. Not yet. I have not thought about that. You know, what something that I've been thinking about, or that in my original plan, Fast Eddie, which is a very good question. Is that I think I'm always gonna work because I'm always gonna maintain busy. I always gotta maintain busy. Like that's what I think is gonna happen. But I'm hoping that in the future I would just need a part-time job. You know, that would be my thing. But I think, I think I'm always going to work until I guess the retirement age in the 60s, somewhere around 60 years old or something like that. So, yeah, I think so. I haven't really thought about it yet, just because I'm trying to stay focused on the portfolio, which I want to see what's going on in my portfolio today. Let's refresh it real quick. Let me just do this real quick. Let me refresh and zoom it in. But my portfolio, well, it's holding up pretty well. $42,500 right now, still. Yeah. So it's holding up very good, my portfolio so far. But yeah, no, I don't have one. When did you guys come up with your retirement number? Like, did you guys think about it, when you guys were already in your 30s, in your 40s, or, a couple of years before? I want to know. Wow, both more SCHD, SCHY, and VG properties this morning. Wow. Wow. I will, not financial advice, of course, because none of what I give is financial advice. I'm not a financial advisor here, but I really like VG properties at these levels, man. I really like it. Let me see. What's the dividend yield? Doesn't have it right here. It's at $26.70. Wow. Let me see VG properties. If I had some extra cash, I will definitely buy some more VG properties today as well. I will back up Anders on that. Yeah, it's 6.7% dividend yield. Look at that. Almost 7% in dividend income. Price target is still at $33, upside of 24% from here. So yeah. Yep. A payout ratio, I can't go by that. But in the next quarter, we should get a dividend increase. Next quarter is due next quarter. It's always in Q3 when they do the dividend increases. So hopefully, I don't think they have announced anything yet, any dividend increases, but they have been increasing their dividend like about 4%. So, and right now it's the highest in dividend yield. It's near the highest in dividend yield that you could pick up any share. So 6.7 percent dividend yield. And you can see right now it's at 45 cents. So yeah, it usually increases about 2 cents or over 2 cents every quarter. So if it grows another 2 cents, that would be like 47 cents a share. That's gonna be a nice increase though. That's gonna be a very nice increase. How much would I get? Let me see. If it goes from 45 cents to 47 cents, let me see how much would I get. Whoop. Oh my god. I put $47. Hold on, let me see. 47 cents. Hold on. It's going from $33, right? And $134 to $35 and $140. Wow. Nice yearly increase, though. That's $6 right there that it will increase for me. And then I will increase almost $2 in dividend. Um, if it increases to 47 cents flat. But let's see what they share. What's going on, Shannon? Hey, fam. I bought CLX. Isn't that Clorox? I think that's Clorox, right? CLX. Yeah, the Clorox company. Um, it's at $96 a share. 4.5% down year to date. Down in the past years, down 23%. Okay. It's currently trading at a 15 and a half PE and a 16 forward PE. Price target is $104. Look at the dividend stats. They're about to be a dividend king. They also gotta grow their increase. They gotta grow their dividend in the next quarter. It looks like. Yeah, they usually do in August. Yeah, so August is when they pay. So they usually pay August, November, February, and May. I do need to increase my dividend income on those months. Payout ratio is getting high. It's 80.3%. Hopefully they do get to lower the payout ratio on the dividend. But that is a nice 5.1% dividend yield. Wow. In Clorox. Let me see. The revenue is going down. Do they have good guidance, Shannon? Because if you see that the revenue has been going down in the past couple of quarters, or the past couple of years, I mean. Yeah, they went from like 7.3 billion, 7.1 billion last year, and then now in the trailing 12 months, 6.7 billion. Do they have some good guidance coming up? Operating income is still at 1 billion. Net income is at 770 million. Earnings per share is at $6.18. So profit margin is at 11%. It looks like they have increased their profit margin. So that's good. Also, their operating margin looks good. They only have a couple $100 million in free cash flow, and they got $4.4 billion in debt. So they have a lot of debt. Did they acquire? Did they have a new acquisition? Shannon, is that why they got so much debt? Because that's too much debt to grab, like, too quickly. Let me see, man. If Vici takes off again, I am going to make bucks. Yeah. So you're planning on selling then, Anders, if it goes up to like 30 something dollars a share? Um, Let me see. Me too from Shannon. Yeah. Man, I don't know about buying SCHD at this price though. Well, you know, I know. I know everybody, panics on buying SCHD, but um look at this. Let me just show you the max chart. It all depends on how long you're planning on holding SCHD, Anders. It all depends. It all depends. Because look at this. Look at the share price appreciation since inception. It has just been great. 297%, And inception was in 2011, which was October 2011. So let's not count those 2 months in 2011. Let's just say 2012. So that is what is it? 15 years, and you had 297% share price appreciation. Plus, on top of that, you have 360% dividend growth. So, in 15 years, I think you're going to think otherwise, but, not financial advice. But yes, man. Who passed 400 shares of SCHY. Nice, man. Nice. Let me see SCHY. That's the International Dividend Equity ETF. It also has a 3.4% dividend yield. Look at the dividend stats. Dividend growth 5%. Yeah. It's all over the place. I wonder, hold on, let me compare it real quick. If you guys don't mind waiting there real quick. Let me see how this combo will work. SCHD and SCHY for the long term. Um, let me see. Let me see the max. Okay. Oh, hold on. I had it in the right one. All right. So SCHD, right? Since also SCHY started in 2021. Wow, and it already has 149% dividend growth. That's very significant compared to the 39% in SCHD. Look at this. Yeah, that is not bad. That's really good, man. And there's if the dividend income continues to grow in that at that pace, definitely accelerating very well compared to the 366% in SCHD. But that's if it continues, though. Do you think it's gonna continue? Let me see. Yep. West Farmers, Unilever. Oh, Unilever is a good company. They have what kind of products is it? Is it Irish Spring and a few others, right? I think it has. British American Tobacco. See what else do I recognize here? I don't recognize anything else, but that's 133 holdings. What this company? What is this? Is this Australian Securities Exchange? Home Improvement. I guess this is like West Farmers Limited. 2.3% dividend yield. Payout ratio is at 117%. Wow. Look at the dividend growth. 79%. Jeez. Um where did that dividend growth come from? All right, let me see. What else? What do you know about Well? Um hmm, Well Tower. Let me see what the company is this. Take a quick look. Well Tower, positioned at the center of the silver economy, focusing on rental housing for aging seniors across the US, United Kingdom, and Canada. It's a REIT in healthcare facilities. 1.2% dividend yield. Let me see. Wow, year to date is performing very well, 33%. Past year is up 54%. Past 5 years is up 180%. It's performing very good. Look at this since inception, 2,000%. The only problem is that this website doesn't have anything for REITs. If you see, they're issuing a lot of shares. There are 679. Let me take a quick look at their revenue. $11.77 billion. Wow. I wonder what their AFFO is at. Property revenue. $7 billion in property expenses. Hmm. Let me see something. Yeah, they don't have here. I gotta take a look at a different website. I don't know much about this company. Yeah, the payout ratio says 144%, but this is not it. That's not the right payout ratio that you want to take a look at. So yeah. Hmm. Statistics. The financials. Let me see the KPIs. Okay, so FFO, funds from operation, a little bit all over the place, but it grew again. In 2025 wasn't a good year, but trailing 12 months it grew again. Let me see triple net numbers of properties. Seniors housing is growing. It looks like it's growing. Outpatient medical number going down. Total number of properties. Hmm. Yeah. Yeah, I don't like that. I cannot do like I can compare. Yeah. can't do research in this one on REITs though. What's up, Jay and fam? I'm out. LOL, see ya. All right, see you, Thrill. Well Tower. Let me see if I can open up. Maybe I could open up stock analysis. I mean, Thinking Alpha. Good morning, Jay. Rare live one for me. DCA SCHD 2690 cost basis. Nice, man. Nice, Frank. 2690, like meaning I think I have you here in the fresh sheet, Frank. I had you here. Hmm, maybe I don't. I thought I did. Lawrence. Oh, it's right here. 1,820 shares of SCHD. You're at nice. The reason I bought Clorox is due to being best in class for cleaning products. In order to be stable, is being first to market or best. I like that thesis. That's a good one. Honestly, yeah, Clorox is really is like the top of the top. Like every household I think in America has Clorox, one way or another. Also, look at the products they make. You will likely have at least one in your home. Yeah, most likely. Yeah, we take a look at their website. I'm pretty positive the same thing. The brands are the brands. They have like innovation, product safety, home care redefined. If you see, it's all Clorox, Chucks. Haven't seen Plumber. This right here, I have used this one too. Previously. Yep, this one, Purell also. Even at even in corporations, like they have these in their bathrooms and stuff, like in companies, manufacturing companies and everything that I've gone to. Around the home you have Glad bags. You got Fresh Step. Kingsford. Look, I got a bag of this. This is what I was using. Actually, I didn't know that they made this. Honestly, this is the first time that I realized this. I did not know that they were the owner of the Kingsford brand. And Hidden Valley. Wow, look at this. Food as well. But Kingsford, I was not aware that they own Kingsford. Let me see the wellness. You got Brita. I have this at home. I use it for my coffee. So I do have those filters. Burt's Bees. Wow. Yeah, they do have a lot of known brands out there. Pine Sol, Purell. When you think of the Clorox company, or when I used to think of the Clorox company, I only thought about the Clorox products, and that was it. But look at the brands, like all the brands that they have. I didn't even know that they own Kingsford, honestly. And I got a bag in there in the garage for the charcoal. So wow, I didn't know that. I did not know that. So that's very good to know. Good one, Shannon. Let me see something real quick. Guys, don't forget to hit the thumbs up as soon as you guys join the live stream. Let me see. My guess is they need the money to grow. Which one was it? Was the wall tower that we were looking at? Or which one were we looking at when you mentioned that? Or was it Clorox? Yeah, it was probably Clorox. I think it was Clorox. That in their financials, in the debt, the balance sheet, yeah, they got 4.4 billion. We can see it right here. Like, why did they acquire so much debt? Like, are they expanding? Maybe they're just expanding, right? You know, this is probably a company that will also benefit from AI in the future, with more robotics in their manufacturing facilities. So you can see it's 4.49 billion. That would be my only question. Like, why did they acquire so much debt? Actually, we could take a look at this right here. Let me go on Google real quick. AI mode. Let me see. The Clorox acquired significant debt primarily due to its $2.25 billion acquisition on Gojo Industries, the makers of Purell. Oh, okay. So they just added that brand to their portfolio. I actually like that acquisition. That's a very good brand. And I always see it, Purell. I have some here, and there's also like I see it at workplaces, like at my job and at other places that I've gone to in the public bathrooms and stuff. Like I've seen that brand everywhere. So this one, it sounds like a good acquisition, honestly. Clorox executed a major $2.25 billion all-cash deal to buy Gojo Industries. This transition initially drove the company's net debt up to 4.7 billion. The purchase immediately spiked Clorox debt leverage ratio to 3.6 times EBITDA. Clorox issued 1.5 billion in senior unsecured notes across multiple tranches. This debt was used to pay down short-term commercial paper and clear an outstanding term loan facility. So it was a recent acquisition, but honestly, that's a very popular brand. I'm just, off here, right? Without, not an educated opinion really in the matter, but the brand is good. The brand is very known out there, and together with Clorox, um, yeah, I think it was a good acquisition. Unless there are some details that I'm missing. Okay, yes, World Tower. Yeah, World Tower. Let me see if I can open Seeking Alpha. Let me see if he has able to. Give me 1 second, guys. Once. Okay. He says that I have to pay, so not able to. But let's take a look at a couple more stocks. Let me see where the stock market is at in the morning. Um, we load it up. You can see that the S&P is all over the place, man. Look at this. Up and down, up and down. Yeah, this is why like following the daily charts can definitely drive you crazy. You want to mostly look long term. You can see year to date is still up 9.5%. These down trends right here like are very small pullbacks, nothing crazy. You know, something that the S&P could recover easily. In the past year, it's up 18.8%, so not much movement. Nasdaq, let me see, is down also 0.45%. Same thing. The S&P is also very tech heavy right now. We take a look at something like SPY, and we see the holdings. You can see that technology is now 34.2% of the S&P 500. So even if you don't want to invest much in tech and you still hold the S&P, you still have a significant amount. Like that's very significant. 34% in tech? Like that's crazy, you know? But tech is what is driving the market right now. With how much Micron has grown, Nvidia, um, SanDisk. Let me see what else do we have here. You know, Microsoft. What else? Microsoft has been down, but it's still growing very well. Let me see what else you have. Intel Corporation, it's number 19. I think Applied Materials, right? It's also on that on that sector. So yeah, there's just a lot in the tech sector as of right now. MU Micron Technology right here. Tesla is also there. Um, so yeah, the tech sector has been growing very well. In the year to date, in the past year as well. The Dow Jones is actually up in the day, 0.13%. Some volatility here in the Dow Jones, but it's still holding very well compared to the Nasdaq and the S&P 500. Let me see some trending tickers. So you still have SMCI, which is up 23%. Geez, any of you guys hold SMCI? You also have AT&T. Wow, up 2.7% in the day. In the year to date, it's still down 7.93%, but you can see in the past month is up 3.4%. Past couple of days is up 6.72% in AT&T. And this one, if I'm not mistaken, has a high dividend yield on it. Let me see what are some other some other stocks that are moving much. So you see GE Vernova or Vernova Inc. is down 6.8%. Let me see. Reported strong Q2 results with 88% surge in orders and raised its 2026 revenue guidance to 45.5 to $46 billion. However, shares dropped after about 5% due to an earnings miss on weak performance in the wind segment. Wow. So one segment can definitely drive the price. Let me see Reddit, which it was mentioned previously in the chat. I remember the other day. You have Reddit ticker symbol RDDTs down 9% in the day. Let me see. Year to date is still down 26.5%. Not sure if any of you guys invest in Reddit also as well. Mm, yeah, those are some of the most actives out there. You also have Ondas Inc. is up 8.3%. Still down 14.9% in the year to date. But you can see it's been running up today, 8.2% in there in the day. Now let me take a look at a couple of my stocks. Those are the ones that are most active right now. I'm not investing in any of those, but I am investing in Netflix, and it's already up to $70 a share, up 2.6% in the day. I wanted it to stay in the 60s. Honestly, I really wanted Netflix to stay there for a little while longer. Current PE ratio is at a 22. So would have been good if he stayed. Maybe we'll go back down. Maybe we'll get a nice pullback by Friday so I can buy some more. Netflix is still down 24.8% in the year to date. And in the past years, down 40.7%. So there's a lot of panic on Netflix in the stock market. And I also believe something that is going on with Netflix is just, probably investors are taking gains or taking profit. They were taking profit from Netflix, driving the share price down as well, as the deceleration in revenue growth, which is growing more at a mature pace than something like a Micron or a SanDisk or anything like that. That is just growing significantly in revenue. Then let me take a look at Meta real quick to see where it's at. Meta's at 629, so it's down 2% in the day. This is my buying range right now, but I think I'm good with my Meta position as of right now. Trailing PE is at a 22. Forward PE is probably like a 19 or somewhere around there, which I still think is an opportunity. Let's see what they announcing earnings, because their earnings call is, I think it's next week, which is when we're gonna have some some good volatility in the market. Yeah, it's gonna be next Wednesday. That's when Meta announces earnings, and we will see where the capex spend is going. And I still think they're gonna have a nice revenue and earnings per share beat, top and bottom line. But let's see what they announce tomorrow. I think this one is also gonna be another one that they'll have a double beat, earnings per share and revenue. But the guidance, the capex spending, that's gonna be the news. Once they announce when are they gonna start getting some ROI, some return on invested capital, or ROIC. Um, Once they announce that, depending on the details that they share, that's what's gonna drive the share price either up or down. If they're already getting some revenue from the capex spend, or they can explain where the capex, where the revenue is gonna start coming from, then it's gonna be something different. Like which sector? They don't really share those very detailed. But same as Google, I think it's just gonna be one that uh the future guidance. That's what is gonna be most important about this one. I'm also looking into the SoFi earnings report. Honestly, I'm gonna be looking at that one because they have beaten their revenue. You can see quarter over quarter since 2022. And then this is the earnings per share, sorry, and the revenue as well. You can see that they have been beaten the revenue quarter over quarter. So let's see. I think they'll have a double beat, a top and bottom beat in SoFi. But I want to take a look. Other than Meta and Google, I want to take a look at SoFi's earnings report next week. I think Visa's is going to be business as usual. Credit transactions, I think it's just going to continue growing like the way it has been. Revenue will continue growing. Earnings per share, they have had a beat in the past 5 years or so. Like this one, I think is just going to be business as usual. I don't see any slowdown on um on electronic payments, like credit card or debit card payments. I don't see a slowdown on that anytime soon, honestly. I think that's going to continue to happen. Are there competitors? Yeah, but I don't think, I don't know if any of those competitors are going to do good against, or are going to beat, Visa, MasterCard, and American Express. Like, I don't know, man. I really don't think so. Those are three solid companies. American Express does issue credit. Visa and MasterCard don't. They're just a toll booth. They just uh, take care of the transactions that happen whenever you scan a Visa or a MasterCard. Um, so I just think it's gonna be business as usual. I'm gonna look at it, but I'm probably gonna look at it last because I think it's just gonna be, the same. I don't know. Let me know your opinion in the comment section. SMPR, good morning. What's going on, man? How's everything? Coca-Cola, also another one that I would definitely need to take a look at next week. Um, yeah, they had a revenue miss recently. A couple of them, actually. So we will see what Coca-Cola shares. Yeah, if you've seen Q1 of 2025, they had a miss. I think Q2 as well. And then Q4 of 2025, they had a miss also in revenue estimate. So let's see where Coca-Cola goes. One for the long term. UPS, any of you guys hold UPS? I know we used to talk about UPS a lot in previous streams before. This one is also announcing earnings next week. But this is my concern. Like the revenue has been slowing down. Like it has been going down. So I don't know why is that happening. Let me see if I can pull it up right here better in a better chart that you guys can see it better. Let me see. But yeah, look at the revenue. It has been in decline. Like I don't know what is going on right here, but this concerns me. Like this on UPS. And I know it's still a big company, very mature. But it does concern me a little bit. The revenue slowed down. on this company. Good morning, future millionaires and those that are already millionaires from Behold. Yes, good morning, man. There has to be a couple millionaires here. I made some more purchases this morning on SCHD. Now at 281. Let me see SMPR. So you were at 271. So wow, another 10 shares. Jeez, man. Nice. You almost at 300 shares. And you have the drip on, right? SMPR. So that would be another 2 shares in September added. The estimated September dividend is $73 as of right now. This is what they paid last year. I'm waiting for SCHD Stan to share the estimate for September so I can add it in there and see what happens. Oh, 281 shares. Wow. Very significant increase, man. That's very good. Alex was one of the ones. I think he's so far winning the most improved from 9 shares to 152 from Alex. Anders also went a rampage, like, went from 612 to 1254. Yes, drip is always on. Nice, man. As long as we don't need the dividend income, you know, I think the drip on in an ETF, that's the same thing, like with DGRO, VIG, BYM, any ETF like that. I think, my opinion, right? Not financial advice, but I think the drip should be on, for as long as you don't need the dividend. But yeah, for the dividend to pick up more and more and more shares along the way, of those solid ETFs, which I think all four are very good ETFs, you know, for the long term, especially. I think the drip should be on. All right. Let me see. What else? What else were we talking about? We were talking about UPS, but really looking forward to those, Meta, SoFi, Procter and Gamble. I think it's gonna be business as usual as well. They had a revenue miss, but they still growing the revenue and their earnings per share year over year. So not too concerned about that. I still think, Procter and Gamble, you know, um Procter and Gamble is one of those companies that you have, um that you have products in your house. It's like the same thing as Clorox, right? Shannon, it's like very similar. I use many different Procter and Gamble products here. Like Tide, Downy, Bounty. We use many different ones. What else was it? Gosh, what other products do I have? I think it's Head and Shoulders. I think is their product too. So yeah, yeah. Procter and Gamble is one that, yeah. I think I turned on the drip. So I have a question for the group. I have FXAIX and BTI. Do some of you hold both? Can you give a little bit more context? Because SMPR, this would be my question, right? Do you hold them in the same account? Or do you have like a 401k where you can only do FXAIX and then you have VTI in a taxable account or separate account? I think that would be best. If is Do you hold them both in the same account? And then you also have more exposure in another, one. My opinion with this, that to me, right? If I have, right, and yeah, it's just I'm gonna give you an opinion, right? But um I think I hold the S&P in too many accounts, but I don't think I will hold both in the same account. Like, let's say if you have a taxable, right, and you have both in there. Let's just say it's just one taxable, right? One taxable account, and you have FXAIX and VTI. I don't think I will have both. I don't think I will have both. I think I will have just one. I like FXAIX. I think I'll go with the S&P. This is just my opinion, right? Not financial advice. Just remember that. But I would just go with the S&P because I want the top 500 companies in my portfolio always, and the fund is going to take care of it itself, right? They're going to either move on from the company if it's no longer a good company, right? Um, or they'll buy more, of that company if it needs to. Like it will rebalance itself always, right? That's the point I'm trying to get to. So I think I'm okay with just having the S&P 500. Not saying that there's anything wrong with holding VTI and the whole stock market, right? But I think I want to be a little bit more concentrated into the top 500 companies in the US stock market. I think I prefer that than owning a bunch of little companies that might not, you know, it's going to be very small percentage anyways. So it's not like it's significant. And that's another reason why I would just do the S&P 500, right? Because even if you have some of companies that you're like, oh man, like I wouldn't even own this company, right? But because it has to be in the fund, right? In the VTI fund, you still own a very small percentage, which is really not going to move the needle much, right? I would think. But what I will do, because they're very similar, whatever is in the VTI is in the S&P, whatever is in the S&P is in VTI. I would just hold one of them only. I wouldn't hold both, and then I will pair that with something else. Um, I don't know what would be, but I think S&P 500 over, and yeah, S&P 500 with something like SCHD or something like that. I don't know. Will be a good match or something else. I don't know. But I think holding one is fine in the portfolio. I'm just saying with the scenario of just one portfolio, like just one, right? You know, I have owned VTI for many years. I agree with Jay. I prefer the S&P. Yes. Thank you, Shannon. Thank you. Yeah, I've learned along the ways, man. That's what I have learned. Like, not saying that VTI is a bad fund. I don't think it is, at all. I think it's a good one for, passively owning the stock market, pretty much, and you just let it ride. But I will go more with the S&P. Just have a little bit more concentration into the top 500 companies that matter, more um than the other ones. So yeah, that is my opinion. But it also depends on the scenario. Like, what is it that you're asking, uh, in there, in like a little bit more details. I think it will be good. But yeah, I would just own the S&P 500. That's what I think I will do. And something that I'm planning on doing in the future, I'm gonna sell my FXAAX. I don't know when that I have in my dividend portfolio, because yeah, I have a significant amount in the S&P, my 401k. Um, and I don't know. You guys tell me. I'll tell you my story. I don't know if any of you guys have, you know, because I mentioned this in the past, right? So I have this portfolio, right, that I share here publicly. I have a Roth IRA and I have a 401k, right? And then now I just opened another 401k, which I'm still thinking on what am I gonna do, if I'm gonna keep it or if I'm gonna, because I was thinking on having a 401k just in case my second job does a match, soon. Then I want to be already set up, right? But I'm thinking maybe on holding it for 1 year and see where it goes. If I don't see anything, any movement or nothing, I'll probably, close it and just up my contributions to the one of my main job, right? So I can keep it all in one. So I have a 401k, which is like 85% S&P 500. I think I should put it at 100%, but I like this one other fund that gives me like some dividends, and it buys me both, more of both every time I get dividends, which is good. But It's like 85% S&P 500. I'm like, it's performing very, very well since I changed everything in there. So it's significant. It's a significant position in there. Then in my Roth IRA, I have SCHG together with SCHD. So I have those there, but I have more SCHG though because I already have SCHD here in my taxable, but I also wanted some SCHD in my Roth, earning where I can get some nice dividends tax free. That's really the plan. And then later on I'll sell SCHG for either, um I don't know what I'm gonna do. I don't know yet. I don't know yet, honestly. I might sell SCHG in the future to have something that pays dividends, and then just collect those dividends tax free and just move them over to my taxable account or something like that. Or um, I'll sell it and I'll move the cash over to my taxable. I don't know. I don't know yet. Or buy something else that pays dividends there. I don't know yet what I'm gonna do with my S&P with my Roth IRA. So since I have a significant position of the S&P 500 in my 401k, I'm thinking about selling this one in the future. I don't know when. This S&P 500 index fund. I like this index fund honestly. At first I used to be like, man, but I kind of want to change it for VOO. But I ended up liking FXAIX. Honestly, one and a half, no, it's half the expense ratio as VOO. So it's very, very low expense ratio, very good performer, S&P 500. But I might sell it in the future for something else that pays dividends because my plan for the future is really to live off dividends that will pay for some of my bills. I don't think I'm ever gonna get to like a $2 million, $3 million portfolio. Honestly, I want to be realistic, right? I will aim for it, but I'm not. I will aim for it, and I will try to think like, yeah, I'll get there, I'll get there. But if I never get there, then I want to at least have some bills covered by the dividend income, and I don't want to sell my positions. I want to hold my positions long term, especially SCHD. So let's see what happens in the future, but that is the plan that I want to have a dividend portfolio where I don't have to sell my positions and spend that money, and then I'll go from having a $1 million, let's just say, throwing out a number out there, $1 million total portfolio value to like 150,000 in a couple of years or something like that. Like, I don't want to do that. I want to keep the million, and I want to keep on growing it more and more over the years. And I would love to pass it down to my kids to where they can live off dividends a little bit more comfortable, and they don't have to work the excessive hours that I work every time. But that is the plan. That is the plan. But very good question though, on that one, because I think a lot of people also, and I'm guilty of it, that we over diversify ourselves at times. And something that I did right now, I hold about 16 holdings right here, if I'm not mistaken. Yeah, 16 holdings. I kind of want to lower my number of holdings, to be honest with you, and make it a little bit more concentrated. That's why I've been thinking about moving on from Coca-Cola and Pfizer, both of them. But it's really because I want to simplify my portfolio a little bit and consolidate it a little bit more. Um, that's really what it is. Coca-Cola is a great company. I like it. I like the company long term. But I might do something like that. I might. Let's see. Let's see what happens in the future, right? I want to hold for a couple of years um some of these holdings. I think something else too that we, that happens often, and I even read it on X post and all that, is that the long-term mentality, I don't know, like, is it fading away, or do you guys see more people just trying to get rich by next week? Like, oh, buy something now and then you could sell it next week, or by Friday you can sell it and make, whatever money. And if any of you guys have done that, has it worked for you guys? Like the short term trading, has it worked for any of you guys where you guys have bought something today and then by Friday you guys have sold it, got a couple $1,000 gains, or something like that? Like, let me know there in the chat. But I still think that buying and holding long term is the way, man. I've seen many people that have solid portfolios with great gains that they share it online, and they have bought some of the holdings in in years. Like they've been holding them for 6, 7, 10 years. More than 10 years. Um, and they have some great gains along the ways. And yeah, it wasn't an easy trip, right, or an easy ride along the ways, but um, because there are always ups and downs on every company. But in the long term, like I've seen people make significant amount of money. Bringer of dividends. Good morning, guys. What's going on? Good morning. Nice to see you there in the chat. And guys, anybody that is just joining in, don't forget to hit the thumbs up. And let me know there in the chat, what are you guys buying today in your portfolios? My portfolio is right now 42,400. It was at 42,500 earlier this morning, like about an hour ago. So right now it's at 42,417 now. So it's down a little bit more. Meta, I'm down in the red now. Avicii Properties, man, I hope it stays in the $26. So I can buy more. I should be reaching 75 shares this week, this Friday. Yeah, down 8.8%. Netflix, I would love to buy another full share. Let me see. Let me see how much can I deposit this week, but I would love to buy one full share again. That's what I think I'm gonna do. Just giving you guys a quick sneak peek of or spoil alert. Buying and holding has worked for Buffett. Yes, yeah. How about for you guys? Are you guys, Shannon? I'm curious. Are you guys buying and hold investors? Have you had any position that you say, well, yeah, I bought this one 20 years ago or 15 years ago, and I've been holding it and it's still generating some very good returns? Do you guys have any stories like that? Like any experiences, I mean, like that, you know? Like, for example, the one experience that I had was Bank of America, which I held it for a couple of years, and it has some great gains, 80 something percent in gains. If I would have held it even longer, right now it's at $62 a share, somewhere around there, I would have had even more gains. I would have had like 100% in gains, plus the dividends that I've been getting paid. So I went ahead and I sold this so I could buy Meta. Let's see what kind of returns Meta has given you, is going to give me. Sorry. But yeah, let me know if you guys have any holdings that you guys have bought and have held for like 15 plus years, something like that, or what's the longest that you guys have held a position? SMPR, I hold both in Roth account. I did it to get small caps as well as large. I had FXAIX first, was thinking of merging. Okay, got it. Yeah, small caps has been performing well. If we do a comparison, right? Let me take a look. Let me do an ETF comparison. Let's see, VTI and VOO. Let's see. Let me see the total returns. So let's take a look at the past year. Okay, so the past year, they're pretty tight. So VTI, you see, has a 20.7% total return compared to a 20.3. So it's beating VOO. In the past 5 years, VOO is beating VTI. So 84.7% total returns compared to 76% total returns from VTI. Then in the past 10 years, you can see that VOO is beating, and this is the first time that I'm doing this actually. So this is going to be new to me, So the total returns for VOO in the past 10 years is 308% from VOO to 291% from VTI. At one point, VTI in 2021 was actually beating VOO, if you guys see right here. And then let me see the max since inception. I don't know which one started when. Let me see. They both have a similar expense ratio. VOO has more assets on their management though. So if you see right here, since inception, whichever one in 2010. So since 2010, you have 806% total return from VOO compared to 769% of VTI. So yeah, owning small caps is good, but um, I think I will go with the top 500 companies in the US. Yeah, that's what I think I will go still. This is the first time that I'm actually doing this with the S&P and VTI. Like I usually compare other ETFs, that I have done in the past, but this is the first time. So since 2010, the S&P has actually performed better than VTI, the total stock market. So, you know, yeah. Let me know your opinion now in the chat. Let me know. But yeah, this one, that's what I will go. That would be my opinion, right? Not financial advice. Just remember that you gotta do your research. Hi Jay, good to see you in the AM. Thank you, Lawrence. Yeah, good to see you too, man. Over here I'm off this week, so and I don't know if I'm gonna be able to do the live stream later on tonight. That's why I'm doing it right now. And I know a couple of people, can only do the night stream. Let me see what I can do later. If I get back from my daughter's activity, which is around 6, 7 p.m. later on tonight. If I get home quickly, then I'll do a live stream. If not, then you know, we'll probably need to wait till tomorrow to do the because I wanna check Google's earnings report with you guys. I have held Pepsi since the beginning, but most of my holdings are less than 2 years. As the market changes, I adjust. Yeah. That's another good thing. Like it's you also gotta adjust with the market, right? You gotta evolve with the market as newer companies come up into the market, right? You want to see what companies um are getting maybe outdated, or maybe the market will be moving on from soon, because depending on the new products that are out there, the new services, and everything, right? Like we weren't talking about AI, in the 1990s or in the early 2000s, right? I don't think so. I wasn't investing then, but yeah. And I only have a Roth, nothing else. Oh, you don't have anything else? Why don't you have a taxable SMPR? I'm curious. You have a Roth and you have both VTI and FXAIX. Yeah. In my second 401k, I have 100% S&P. Because all the other funds, like they just charging like crazy, 1% over 1% expense ratio. The returns are nowhere near the S&P. I'm like, nah, man, I'm not paying that much. And I didn't see anything like full tech that I will see like great returns, and with a little bit higher of an expense ratio over the S&P. Like I didn't see anything like that, so I'm like, nah, I'm just gonna put everything into the S&P. Oh my gosh, I'm getting tired already, and it's the morning. I love my Pepsi stock. Gonna add more as I get some dividends. Nice, bringer of dividends. Bringer of dividends. I agree, and I actively add monthly. Nice. Passetti, it's so close. It's same to me. If you're gonna take a chance on something, dude, in a rough, so if you hit that grand slam, there's no taxes. Yeah, yeah. I see where Fast Eddie's going. Like something that I would do, right? For example, the approach that I took SMPR is, and this is not financial advice, but I tried to pair, two different ones. I did SCHG, which is focus on growth, large cap growth. And then I did SCHD, right? With the dividend. I love the dividend growth of SCHD over time. I'm gonna grow a nice position there so I could get hopefully some nice but something that I want to do is something like tech heavy, like VGT or XLK or something like that in my Roth IRA as well. I did some Ethereum because I wanted to make a crazy move, like what Fasted is saying right here. So if I do hit a grand slam with Ethereum ETF, then hopefully I'll sell those and I'll buy something safer, ETF wise. Um, but I see what Fasted is going. Like, if you go there, uh, yeah, you already have. I feel like if you have one or the other is fine. Like I said before, and pair one of them with like something different. Maybe not financial advice, but I try not to give financial advice. Not financial advice, but maybe something like that. It's like two different things. I feel like VOO VTI is like the same. And you're just gonna grow the same, and it's all the same. It's like going. I think it's like going 100% VOO, like what I have in my 401k. So that's what fast steady means. Like, maybe pair it with like something. There's a couple channels out there, like I forgot what was his name, but that shares, some good combinations with ETFs, that you can have either the S&P or total stock market or something like that, as a main fund, and then you can pair with other ETFs that are also solid as well. Like VGT has had some great growth. Yeah, if you see, look at this. VGT total return 1,997%, right? So past history will most likely not repeat itself, right? Exactly the same. But look at this, you got some nice consistency growth in the S&P. Don't get me wrong, very good to have that. But look, you pair something like VGT or XLK, I don't know, anything that you like, you have also 1900%. Yeah, in XLK. I like VGT. I think that's the one that I'm doing. I always like that ETF. ETFs in my Roth, I wanted to keep it as simple as possible, but I don't think I'm gonna grow my SCHD position anymore. I think I'm just gonna let it drip for years, and I'm just gonna grow the other position, SCHG and VGT, and just focus more on growth in my Roth IRA. But yeah, very good topic there, though. Very good topic. Let me know, guys, if there's any other questions that you guys have there in the chat, so we could talk about it and we can have some different opinions on it. You know, I don't think I don't even know what I was gonna say. But let me see my portfolio. Oh wow, down to 42,300. Let's see where it goes. My portfolio. Um, but yeah, wish I had some cash though. I could buy some more. Wow, Netflix is already up to $70 a share. Do you think Netflix just hit the bottom? What do you guys think? After they announced earnings, I think that was a great opportunity, man. You know, look at this. Do you guys think that Netflix just hit the bottom, or will it go under $67 a share once again? The 52-week range is $65 a share. They even reach $65. Wow. The biggest thing is to start as soon as you can. Not doing it is missing a lot of opportunity. That is very, very true, man. And that's what I'm gonna try to push my kids towards, like, to get them used to invest their own money as well into the S&P. I want them The two ETFs that I want them to buy, honestly, and I'm like 80 to 90% certain this is what I want them to do. It's gonna be S&P, VOO, and VGT. That's what I'm doing with them. You know, I yeah, that's what I think I'm gonna do with them. Very focused. You know, unless they get a very good job where they have a nice 401k, then I have them do the S&P, full S&P in the 401k, and then in a taxable or something that they open on the side, or a Roth IRA or something. I do want them to invest in a taxable though, because I want them to be able to have something that if they do very well and by the age of 40 they have a meaningful amount in a taxable account, and they can maybe retire earlier in the mid 40s or something like that. I would love for them to do that. I would love for them to have that option that they can retire early. So I'm still gonna have them build also a taxable, um, and that's where I think I'm gonna put like a lot of VGT in there. But yeah, that is gonna be the plan. Have you looked at a data center like Hive, APLD, Corson, and Iron? No, but I know that Iron or Irene or Iron Limited has been running up as of lately, right? It's up 10% in the past couple of days. In the past month, is down 28%. Year to date, is still up 13%. Last year is up 135%. The company owns and operates computing hardware as well as electrical infrastructure and data center. It also mines Bitcoin. Oh, nice. Um, yeah, no, I haven't looked into any of these. No, haven't looked into anything like Iron or Irene. What do you think of ORCL? Oh, Oracle Corporation, trading at a 21 trailing PE, 15 forward PE. Let me see, software infrastructure. I've seen many things about this. If I do invest in software, the one that I did research on was ServiceNow, which I did like. IPO day was 1986. Down 35% year to date. In the past year, down 47%. Yeah. Software has been taking a hit, but they have been growing. I want to see ServiceNow's earnings report, which it should happen later today. And I want to see their guidance as well. Like, what is their future guidance? That's what a lot of investors are nervous about when it comes to software. What is their future guidance? Is software going to be disrupted by AI? Is an AI LLM, going to uh, be able to make programs, the programs that they have, like ServiceNow has, that Intuit has, and all of those? Is that gonna happen? I don't think so, right? But I'm also not a tech savvy guy. I'm not a programmer or anything like that. So I think it takes a lot more for you to replace any of those companies. Same thing with Oracle. Look at this. Revenues, it has been growing $67 billion. Yeah, look, it's accelerating in the past couple of years, as you can see right here. Operating income, yep, is growing $20.6 billion. Oh my gosh, there's outstanding. They're issuing shares. Look at that earnings per share. Also, same thing, $5.94. But it's growing. I think this one is mostly also same thing as ServiceNow and Google and those. But no, ServiceNow, Microsoft, it's more the future guidance. Where are they going as a company? Like, are they still gonna have the same demand? But looks good. Looks good. MGY is oil that bought another oil company that has upgrade. Nice. I gotta go from Shannon. All right, man. See you. Thank you for stopping by real quick, man. Buy more Vici this week, considering DMP for the long-term stability monthly check in case of inflation, economic slowdown. Not good with growth. What is DMP? I don't think I've seen that one. DMP Select Income Fund has a 7% dividend yield. Wow. Hold on, let me see the share price. Up 12% in the past year. In the past 5 years, is up 4.5%. What is this? The close-ended balanced mutual fund. Okay, got it. For the fixed income portion, the fund invests in bonds. Six to invest in stocks or companies operating in the utility sector. They are growing their revenue. You see it right here. Operating income also. They are issuing shares though. A lot. Earnings per share is in the positive at 185 million. $1.85, sorry. um why does it say profit margin 400%? Like that's crazy. Let me see. I don't get employer matches, so just stuck with a Roth. I moved all in taxable over to Roth because I am 56, so getting closer to retirement. Okay, okay. Yeah, so you're almost 59 and a half, so you're going to be able to use um that money tax free, yeah. Yeah. Yeah, 59 and a half, right? You could start pulling the contributions if you want, tax free, so that sounds good. Um Yeah, I see. I see that you don't get an employer match. Yeah, I don't get one in the second job. I'm gonna see. I'm gonna hold it for like a year, and then if there's no news that they're gonna do an employer match, because I know that sometimes, which they did once in my job. Once in my job, they just stopped it for some time, but then they put it back, right away. So, which is good, and that's why I continue to have that 401k. Um, But on my second job, if they don't do one, then I'm gonna most likely close it later on, and I'll just move it over um to the regular 401k or something. I'll just deposit it over there, and just continue growing the one on my regular job. All right. But yeah. What else? What other company I wanted to take a look at? Let me take a look at Amazon to see where it's at. Have you looked at blocks that pays a 9 cents each month that has upside? Let me take a look at it. Amazon is at $243, down 1.6%. I like this pullback on Amazon. I'm gonna continue to DCA into it whatever I can for now. So let's see. I want to get to at least 20 shares of Netflix before I stop buying and focus more into Amazon and Google for the long term. Let me take a look at blocks. Nicholas Crypto Income ETF. No, no, I don't do this one. Because I pretty much I invest in crypto already, in iBit. That's the one that I kind of. Oh, I see, I see. This one is in TSM. Nicholas Bitcoin Tel ETF. iShares Ethereum. How do they pay so much? Actively managed fund that consists of crypto company stocks, underlying funds that provide exposure to Bitcoin and Ethereum, and an options overlay. Oh, okay, so it does options. That's why it has an expense ratio 0.99%. Down 23% in the past 5 years. Um, no, no, I don't invest in this one. Is this one of those that pays weekly? Wow, crazy. Oh, it does pay weekly. Yeah, payout frequency weekly. Wow. a great fund with all those assets. Yeah, do any of you guys hold a weekly paying ETF? Like this is like getting a paycheck every week. Dividend yield is 46%. Wow. Wow. Weekly paying ETF. Inception day was in June of 2025, so a year ago. I gotta give it some more time. This is like an IPO, right? Like, you know, um, I want to wait, and see how it performs in the long term before I add anything like this to my portfolio. Right. See where Bitcoin is at. Bitcoin is at 66,000 past couple of days. It's up 3.4%. Year to date is still down 24%. You see, the crude oil is going up, man. This is not good news. Look at this. It's up almost 10% in the past 5 days, 16% in the past month, man. This one hurts me, man. It hurts my pocket a lot. Um, to have the fund like to have the crude oil that high right now. Let me take a look at Visa, see where it's at. $355 a share. Do you think Visa will reach $400 this year? GOF pays monthly of 18 that support at $10.40 that then rebound. Nice. So you got Visa. Let me take a look at Main Street Capital also. Another one. $53. MGY has upside that raised dividend and low PE. I'm interested. Magnolia Oil and Gas Corporation. What is this? Oil and gas exploration. Okay. Forward PE is at a 9. Wow. Dividend is 2.63%. Price target 24% upside from here. Year to date is up 17.9%. Let me see. Past year is up 14%. Past 5 years is up 83%. Oh, wow. The dividend is very well covered. Dividend yield is 2.63%. Payout ratio is 36% only. So that's nothing. That's safe. Keeping the payout safe. Dividend growth 12%. Wow. Very significant dividend growth. Look at this double digit percentage in dividend growth. That looks really good. And with the dividend yield, yeah, the dividend yield is near all-time highs too as well. Nice. Take a look at the financials real quick. They are growing the revenue, as you can see, slightly. Or no, maybe not. Hold on. No, it's in the negative. The trailing 12 months down 1%, 2%. Operating income is also going down 431 million. Net income going down. Shares outstanding. Free cash flow also going down 385 million. A nice profit margin though, 25%, but it's going on the decline. Operating margin as well, 32%. We'll need to learn a little bit more about this company. All right. See, what else do we have here? Yeah, let me know there in the comments, guys. Anything else that you guys want to take a look at? We already took a Clorox company also as well. Let me see. Weekly challenge, E ratio, keeping track of that. SoFi, continue building that SoFi position. Remember, it's gonna be like a 10 plus years or something like that. Um, Folio real quick. Oh, Madden, thank you so much, man, for the donation. Really, really appreciate it, man. $5. Let's go, man. Really, really appreciate it, man. Thank you so much, man. You know, you guys are always killing it, man. Let me take a quick screenshot. This one is probably gonna go with my with the next video as well. But thank you so much, bro. Thank you so much, man. Wow. Wow, thank you. Thank you. That's gonna go to SCHD, just so you know, Madden. That's gonna go to my SCHD position, man. You guys have been killing it, man. Last time it was Capital and you know, and Looney also, and David and Mike also as well. Now Madden, man, you guys are killing it, man. That's gonna go into SCHD. As soon as I get paid from my YouTube, it goes into SCHD. Buy me more and more shares. I want to grow that dividend income so much. Right now, currently in my dividend portfolio, which is this one, I'm at 446 shares right now, right? 446.288. And I got $12,200 invested in SCHD. My yield on cost is at 3.83%. Some of the shares, I have a 4% yield on cost that I bought previously. But look at my estimated yearly dividends. It's at $467 from SCHD. So thank you, Madden. You just boosted that dividend income, by more. So, once I get paid, that. But thank you so much, man. Really, really appreciate it. Always supporting. You have been a subscriber to the channel for quite some time already. But yeah, and then my total dividend income right now, just the dividend portfolio alone, is at $1,015. That's the estimated forecasted for the next 12 months. If nothing changes, nobody cuts their dividend, nothing like that, I should get $1,015. But of course, this is going to continue to grow as the companies continue to grow their dividend income, as I continue to add every week into my funds, into Vici properties, into what else? Into Main Street Capital, even Meta pays me $10 a year. Johnson and Johnson pays me $55 a year, which I should is pretty expensive right now. I think the stock, I think it's a bit pricey. But I'm thinking about turning turning the drip on. So $55 from Johnson and Johnson. You got realty income at $117 in estimated yearly dividends. Vici properties $134 and growing. Man, and they should be boosting their dividend once again. This Jay, what's up, brother? RM, what's going on, RM? Thank you for stopping by. Whoa, what the heck is this so early? Yeah, X. So look, I'm off this week right now. So what I'm doing is I'm doing a live stream right now, because later on tonight I might not be able to do it because I gotta go somewhere to my daughter has an activity that I need to go watch. I might not get back until like 9:30. I did wanted to do a live stream later on tonight, but I don't know if I'm gonna be able to. And I wanted to talk about Google's earnings, man. Can't wait to see Google's earnings. Anyone else buying MCD like crazy this week? We were talking about that one previously, in previous streams. I like McDonald's, not financial advice, of course, guys. But I like McDonald's at these levels, man. Look at this. It's at $263 right now. Year to date is down 13.6%. Now, remember, this is not going to be one of those companies that is just going to boom, and shoot up like a rocket, like a Micron, like a SanDisk, like, Nvidia, Palantir, anything like that. But and this one, if you're planning on buying McDonald's and hold the long term, I think this is a good and a good place to DCA into the stock. You know, remember they're mostly a real estate company, and you get a qualified dividend because what they do is they rent. They don't even operate most of their businesses. I forgot what the percentage is, but they don't even operate it. It's just independent franchises or independent owners that they invest in McDonald's and they rent it from them. So I think this is a good entry point. It's near 52-week range. It was $263.14. That's the 52-week low. But look at this. Wow. $263. Look at this. Forward PE is at a 20. Trailing PE is at a 21. If we take a look at the PE ratios alone, look at this. It's at the 5-year low, 21 trailing PE. 5-year low. Might even be at the 10-year low. The forward PE also at a 20. Yeah. Price to sales is at 685. Yeah. So, yeah, it's trading. Gosh. Look at the dividend. You also get a 2.8% dividend yield, almost 3%. Payout ratio is at 60.5%, and they grow their dividend 5.3%. This is a mature company. You're not going to get crazy growth like some of the other ones, crazy 50, 60, 80% revenue growth year over year, but you get a nice steady revenue growth. Look at this. It's in the single digits. This one is more of a you buy and then you got to hold, 20 plus years or so. Will McDonald's ever, McDonald's, I made an early entry as 277 from B-hole. Nice. Yeah, McDonald's in our lifetime, do we think McDonald's will close down? Will ever close down? Nah, I don't think so. They're too well established, an established company internationally also as well. They're all over, the world. They're not only in the US, they're all over the world. There's some McDonald's everywhere, you know. So will all the McDonald's close overnight? Nah, I don't think so. Not financial advice, but I like this, I like the current levels. Let me know there in the chat what do you guys think about McDonald's at a 52-week low run. Yes. Jack is better. Is that Jack in the Box? Yeah. They probably have good food, but McDonald's is just too dominant right now. Yeah, Jack in the Box is down 34% in the past year. Price target is $16, so upside of 11%. Past 5 years is down 86%. Yeah, not very good performance in share price. Michael. Yeah, look at the revenue growth though. Look at this. Not a good sign, Michael. Hey, I'm at the immigration in Manila airport. Hey, KC, what's going on, man? Hope you're, definitely enjoy your trip. Definitely enjoy it, man. Keep us updated, man. Keep us updated. That's cool, man. MX at $3. What is this? Magna Chip Semiconductor Corporation. The revenue is in decline, Michael. What's the turnaround play in this one? Is it going to turn around? Down 83% in the past 5 years. Would you mind taking a look at TSCO, Jay? TSCO, no problem at all, man. Tractor Supply. It's currently at a 14 PE, 14 forward PE, okay. Dividend 3.24%. I like it. 33% upside in share price from here. $39. Let me see. Year to date is down 40%. Wow. Past year is down 48%. Past 5 years is down 18%. Wow. What happened to this company? What were the bad news that happened recently? Look at this decline in share price. Like, is this an opportunity or is this a say it's mm, and what I'm going to do is I'm gonna have AI think first, right? So I can understand why the price decline. Decline in uh TSCO shares over the years. Okay. All right. While Gemini thinks about that, let me see. Dividend yield is 3.24%. Payout ratio is 46%, so pretty safe. Dividend growth 4.4%. They have grown their dividends 15 years. The dividend increases have been on a decline. At 4% currently, 11% in 2023. So with the pricing decline, you can see that this is the highest dividend yield that you can pick up any shares at, 3.24%. Dividend growth is just, let me see. So the revenue has been growing more like a mature company like it is. 4%, 2%, single digit, revenue growth. In 2022, in 2021, significantly increase in revenue growth. Now has been slowing down. Let me see. The operating income is also going down 1.45 billion. Net income, yep, it's also going down. Let me see the shares outstanding. They're buying back shares. That's a good sign. I like that. Earnings per share is at $2.04. Okay. Free cash flow, there are 553 million. It just went down. 553. Let me see. Profit margin is at 6% in on a decline. Why is that? Is it the cost of materials to make these machines? Operating margin is at 9.28%. Free cash flow margin, 3.5%. Okay. Let me see the balance sheet real quick. Total debt, wow, $6.4 billion. They have a lot of debt compared to the cash. Net cash per share is at $11, negative $11.65 because they just have a lot of debt. Yeah, you see, they need $6.1 billion to pay all that debt after they spend the free cash flow that they have. The PE ratio is at the lowest in the past 5 years. So it shows like it's undervalued right now according to the past 5 years. The one thing that I will worry about, that I will just do my research in RM, is the guidance of the company, right? What are they spending on that debt? Let me see. Maybe you will say it right here. I just put a question here for Gemini. The recent decline depends on whether you are tracking the U.S. rural retailer tractor supply company or the U.S. ticker UK super. If you're looking at the NASDAQ, deep drop of approximately 46% over the last year. Roughly, if you mean, okay. The severe downturn over the last year is primarily due to a stalling corporate growth and direct macro pressures on its core consumers. Okay. Same store sales have flattened over the past 2 years. Okay, so yeah, that's a good KPI to look at, signaling that the company is struggling to pull new shoppers into its brick and mortar stores. Long-term revenue growth slowed to a sluggish 2.6%. Yeah, which is what we just saw right there. Sticky inflation and high fuel costs have severely crimped the disposable income of rural customers. This led to trip consolidation where customer traffic declined because people visited stores less frequently. So less foot traffic into the stores. Same store sales are flat in the past 2 years, and then the revenue has been slowing down, has been sluggish. It's not growing. So those are some. Yeah, if you believe in the company long term, if you could get past those, then it looks like this might be an opportunity. Key analysts noted that competitors like Costco and Chewy have actively taken market share away from Tractor Supply. Oh, yeah, I wouldn't want to have Costco as my competitor like that. You know. So, um hold on. So, let me see. Yeah, those are the issues that it has. RM. So what do you think? Do you believe in the company long term? This is a nice downtrend right now. The debt will worry me also. So I just gave you a couple points there, and then I would just look at the debt, to see what does the why so much debt, but yeah, those are the points. All right, need a fast food ETF. Way too much competition. Yeah, X. That's not a bad idea. That's a very good idea. Own McDonald's and eat at Arby's mostly. Is Arby's public? Beho? Do you have the ticker symbol if it is? I probably spent thousands after McDonald's. I should buy and try to make some of that money back. Yeah. Yeah, it looks like, it looks like a nice opportunity, but I don't know, at McDonald's. Yeah, not financial advice, guys. Just remember that you still gotta do your own research and make your own decisions. That's what is very, very important. And we look at Philip Morris. Um, Philip, do you have the ticker symbol? Yeah, if you could give me the ticker symbol, that would be best. Yeah, if you could give me the ticker symbol, Madden, we'll take a look. I'll take a look. Please give me the ticker symbol. And thank you for the $5 earlier, man. I really, really appreciate it, man. NUS looks cheap. That I have a little. NUS, what is this? New Skin Enterprises. 4.5% dividend yield. Wow. Only 22% payout ratio. They have paid 6 cents for the longest. Look at that revenue decline though. That would be the problem. 1000% X. Yum, MCD restaurant brands, Wendy's, DPZ. I buy that ETF, LOL. Yeah, DPC I think is also on a nice Yum Brands. Isn't Yum Brands the one that also has Taco Bell? This one is gonna be a problem though. I think this one, especially with that whole, explosive, diarrhea thing going on, whatever it is, in the consumer discretionary sector. Hey, man, I think we gotta be careful with the next couple of earnings. The revenue is still growing though, and it's accelerating. Wow, 9.6%. Let me see. Operating income is also growing, 2.67 billion. Net income is at 1.74 billion, also growing. The shares outstanding is they're buying back shares too. Earnings per share is at $6.24. Free cash flow, it is 1.65 billion. Wow, look at that profit margin, 20% for a restaurant chain. That looks good. Operating margin 31%. Let me see. It's near its lowest in the past 5 years right now, currently. In the trailing PE, the forward PE is actually the lowest. Let me see. It's down 1% in the year to date. Last month down 1%. Okay, past 5 years, it's still up 27% in the past 5 years, but it's on a nice pullback right now. If you see right here. So is this a good time to buy Yum Brands? They have KFC, 63,000 plus restaurants. Jeez. So you got KFC, Taco Bell, Pizza Hut, Habit Burger. I never had this one, Habit Burger. Um, but I like KFC sometimes, not all the time, but I like KFC. I like Taco Bell, but right now with the explosive thing, you know, I just wouldn't do it right now. Even though I do like their chalupas. And then Pizza Hut. Um, I like Pizza Hut, but I used to eat more Pizza Hut before. Now I don't have one close to me, so I do not buy Pizza Hut just because of that. If not, I think I will buy it. Yeah, this one is also a company that is also spread internationally, just like McDonald's. Just remember that. Like it's not only in the US, it's everywhere. So oh, right here it says Yum to sell Pizza Hut. Enters into agreement to sell Pizza Hut for $2.7 billion. Oh wow. Yum China Holdings. Yeah, they're about to sell Pizza Hut. Wow. All right, let me see. Appreciate you looking at TSCO. Great breakdown, Jay. I'm adding to it daily, but the second I see major pressure on the dividend, I might sell. It's already been foretold that Taco Bell will win the war and become the only restaurant. WMT, Walmart, Kroger, and what is SMF? SFM. Sprouts Market, Farmers Market. Down 6% year to date. Down 7% in the past month. Wow, down 55% in the past year. Why is that? Take a look at the ratios quick. Not the lowest it has been, but it's near its lowest trailing PE in the past 5 years. Same thing with the forward PE. It's near its lowest. The revenue has been growing, but yeah, 10% growth. That's good. 675 million operating income. Let me see the net income. 507 million. Buying back shares. The profit margin is only 5%. Let me see the free cash flows. 362 million. Let me see the balance sheet. $2 billion. Okay. The net cash debt is at 1.81 billion. Why is that? You gotta take a look at the same store sales also as well. Interesting one. Arby's is private from Beho. Oh, PM Philip Morris. Let's take a quick look at that one. Madden. It's at $193 a share right now. It's up 2% in the day. Didn't this one just announce earnings today or yesterday? Yeah, it's right here. Philip Morris. They just announced earnings. They had a top and bottom beat, Madden. So 5.7% of revenue beat plus 7.3%. Yep. Let me see real quick right here. Take a look right here. You see, 17 minutes ago, reported stronger than expected Q2 results, which is good. Adjusted EPS of $2.20 and revenue $11.1 billion, both exceeding analyst estimate. However, weaker Q3 guidance led to a slight dip in share price despite a 20% year-to-date gain. Yeah, so year-to-date gain is still good, but I guess there was something in the guidance that investors didn't like. Hold on. I spilled that little bit of coffee that I had there. All right. Um, so it was their guidance. So the guidance would be something to look at. Madden. Now let's take a look at the company itself. It was trading at a 26 PE, 22.4 PE, 3% dividend yield. Nice. This is a cigarette company, right? Yeah, tobacco. So 109 price target is only an upside of 1.3%. So I'm guessing this one is mostly for dividend. Top 8% in the past month, 20% year to date. Nice performance. 6% in the past year, and then 99% share price appreciation in the past 5 years. The dividends, the payout ratio is creeping up. It's at 82%, so it's getting closer and closer to 100%. So just keep an eye on that. Dividend growth is up 8.8%. They have grown their dividends for 17 years, 3% dividend yield. That's a nice yield right there. Nice dividend growth right there, almost 10%. They should be increasing their dividend in the next quarter. That's when they usually do in Q3. So, dividend charts, they increased their dividend significantly in the past. The past dividend increase was 8.8%. Okay, yeah, so it's at 3% right now. 2024 seems like it was a good time to buy this one with a nice 5% dividend yield. But the share price has been running up. The revenue, 42.5 billion. They have been increasing their revenue. So this is good. This is a good sign right here. Between 7 and 10% year over year. Let me see. The operating income is also at $16 billion. Okay. Net income at 11.5 billion. They are, yeah, they're flat on shares. Okay. Earnings per share is at $6.96. Okay. $10.6 billion in free cash flow. The profit margin 27%, so that's nice. Profit margin 27%, sorry. Operating margin 37%, so I like that. Free cash flow, it looks like they didn't announce the trailing 12 months yet. Gotta take a look at that. Let me see the balance sheet, how much debt they have. They have $49 billion in debt. They have a lot of debt. Um, see the ratios. Pretty pricey right now, compared to previous years. If you compare it to previous years, where do you want to start buying this one at? Also, the forward PE is a little bit pricey. The future of smoke, I don't follow the future of smoking, right? Because it's something that I dislike. Honestly, tobacco, I dislike it very much. Personally, do I hold these in the S&P? Yeah, most likely they are in the S&P. But what's the future of smoking? What's the future of their products? Like, do you see, e-vapor, heat no burn? Let me see, oral nicotine, smoke-free products. Yeah, it looks like they evolving anyways with the market or with the population, right? Because I think the next generation they don't do cigarettes per se. I think they do more of those electronic ones, right? So are they evolving with it? If they're evolving with it and they're still making and growing some good revenue, then long term, it seems like they're setting themselves up for a successful future, I would say. But I would just look at the debt. They do have a lot of debt. Do they have a plan for that? That would be good. Look at future guidance. It seems like they had like slightly weaker guidance, but if you're not worried about one quarter, it is a little bit pricey though because the share price has been going up. I would just wait for a pullback, for a nice pullback. You know, if you're thinking about entry point, into this one. So, not financial advice. Just remember that, guys. You still gotta do your own research in any of these stocks that we're talking about right here. Wow, it's 12 o'clock already. MP and BTI both are the same. Look at book value of NUS. Yeah, so the book value is at 794 million. Okay, cool. Book value per share $15.95. The total debt is 277 million. What was their cash flow? 41 million. Any thoughts on KR? I'm buying personally with them acquiring Giant Eagle. Michael. Explosive diarrhea. Did you die? That's what he's saying. Isn't that what they're saying? You know, out there, like some news. Yum just sold Pizza Hut. That rev will be down. Yeah, the revenue. I will just wait. Yeah. Yeah. I will wait until for Yum. Yum C might be bet after the dip. Sprouts has insane prices. Del Taco that is owned by Jack in the Box. Sprouts has went through a rough patch with customers and prices in 2019. The stock was 30 something dollars. I will stand clear from grocery stores, competition prices, theft, communism. Yeah. I think the only store that I will invest in it will be Costco. That's the one that I really like. I like Costco, you know. I think that if Costco has a crazy pullback in share price where it gets very cheap, to like a 30 PE, which is crazy, man. Because Costco always trades at a high PE. Look at it right here. Let me show you real quick on camera, on the screen. Look at that PE ratio. It's at 46 right now currently. It was at a 53 in 2024. Look at the lowest in the past 5 years. It's at a 38 PE ratio, trailing PE. If it goes down that low again, I think I'll probably sell some of my positions and buy Costco. I like Costco for the long term. Look at the forward PE. Also, it's crazy, man. It's crazy. Payout ratio for the dividend 27%, man. 27%. Yep. If one of my kids, goes ahead and applies at Costco and starts working at Costco, I'll tell them right away, do the employee match program. Right away, man. Get some Costco shares, you know, for sure. Because I think they also get them at a discount. So get some Costco shares right away, Right now, the price target is a 16% upside from here, $1,076. Dividend yield is a 64%. They do pay a special dividend every couple of years. So you can see that in 2023, they pay $15. So don't be surprised if in a year or two they go ahead and you know, their free cash flow is at $8.8 billion. Look at how it's growing, their free cash flow. Total debt is 8.1 billion. So yeah, they can pay off the debt if they want. Who here owns Costco? Look at the dividend growth, 12.6%. Yeah, double digit percentage growth. Look at this, 13%, 13%, 12%, 1,000% in 2023, but that's because of that special dividend. I may buy BJ's wholesale club for sentimental reasons. BJ stock. I'm going with Costco. Let me see. Why sentimental reasons? I'm curious. Um, in the past 5 years, it's actually up 85%. Past years down 11.8%. Price target $100. See the ratios real quick. Still not at the lowest PE ratio in the past 5 years. And the forward PE is also at a 19. So not the lowest. But I wish I owned Costco. And me too. I wish I would have started investing with Costco. Like, I wish I would have bought that one at first because Costco when I first started investing in 2022 was a $400 yeah, $400 a share. I don't know why I didn't buy it. I would have had double my money already. Even though I had like only a couple $1,000 portfolio, it wasn't like that much, but I wish I would have bought that. I would have done so many things differently, and maybe I should start thinking that way, but you know, maybe I should sell all my holdings and just start all over again. Have any of you guys done that in your investing experience? Have you guys ever, sold everything and like started all over again or something like that? But right now, I feel more and more. How often does it pay dividends? Every quarter. And then once every couple of years, they pay a special dividend. In December, you can see in 2023, they paid $15. But they pay their dividends in hold on, I'll tell you right now. February, May, August, and November. And then at the end, in December is when they pay the special dividend. That's when they have too much cash flow that they don't know what to do with it. They pay a special dividend, to the shareholders. It's where we shop for the last 20 plus years, and I do DoorDash orders there. Oh, got it. Yeah, that's good. That's good. I shop at Costco all the time, you know. Yeah, I shop at Costco all the time. Two of my kids like going with me. So they're gonna be right now because I like to shop at Costco and they go with me all the time or most of the time. They're most likely, you know, it's most likely that they will be also shopping at Costco in the future. You know what I mean? Because they're seeing what I'm doing and they're gonna be used to. So, um, you know, what would you do when you start now new? Booksy. That's a very good question. Okay, so look, here's what I would do, right? If I started all over again, I started investing, I still wouldn't change my ways of investing, right? But I will have less positions just to start, you know, which is what I've been considering, selling some of my positions to be more concentrated. I think I will be more concentrated. I will start right away by doing SCHD. I don't think I would change that. I think I would still invest in SCHD. Um because of what I know now, like if I started all over again, I would definitely put my portfolio to where in my retirements is gonna be S&P 500. I will keep it the same in my 401k, S&P fully. I didn't have it fully in the S&P though, um, before until I started investing. Once I started investing and I started noticing the high expense ratios, Bugsy, and how I was not performing good at all in my 401k, man. I went ahead and I just switched it into S&P right away once I started learning. So I did that, right? So I will do that. Retirement, S&P 500. That's what I will do. In my taxable, I will still have the mentality of going with dividends, but I think I have a few companies that I will go with. I will do SCHD. I will do Costco. I will do Visa. And I will still add Google and Amazon. I think that will be my starting five. I think that will be my starting five. If I started all over again, I will build up my SCHD first position, you know. Um, yeah. But I will start by building my SCHD first. Like that's what I think I will do. I will start with that. Build a significant position in SCHD. If I only had one account, let's say I only had the taxable, I will definitely build an SCHD and S&P 500 portfolio first. I will do those two first, and I would like for them to be about 70% of the portfolio. And then once I build a nice position there, then I start looking into those four companies: Costco, Visa, Google, Amazon. I think I will look into those, and and build that portfolio there. That's what I think I will do, man. You know, but I will build first a solid ETF foundation in my portfolio at first, instead of going into stocks. Because what I did was, um, I did some stocks first, and then after that is when I started adding SCHD. You know, so I didn't do so well. I should have done differently. And then also another thing that I will change is that I did stop depositing into my taxable because I got discouraged. I would just continue depositing regardless of where the market is. Try to find opportunities, DCA into SCHD, see if I find some other opportunities, because at first, you know, I got discouraged because 2022, share prices went down. So I'm like, oh my gosh, like this is gonna be crazy. When am I gonna recover my portfolio? Like I had so many questions in my head. So I will just definitely start by doing that and not get scared about pullbacks in the stock market. Now I'm more prone to that. Just SCHD and SPMO. That's another good combo right there, Booksy. Um, Great combo right there. SPMO is the momentum S&P 500 ETF. Yeah, something like that. I will start. Um, two good solid ETFs. You could also do like VGT and something else. As well. An S&P or SPMO or something like that. Or VGT and SHD. That's a great combo right there. Jeez, a solid combo right there. But that's what I think I will do, something like that. Um, yeah. Um, just SCHD and SPMO. Nice. RM, for someone who wants to retire at 50, would you focus on your 401k, Roth, or taxable account? I'm 32, so I'm trying to figure out where I should put my money to grow. Key thing for me, retirement at 50. So that's a very good question, RM. My goal is to live off my dividends until I can touch my 401k penalty free. So if you can, I would definitely do 401k and Roth as well, whatever you can. But since your retirement age or goal is 50, I think I will mainly focus on the taxable account. And I know that you're going to pay taxes along the way, right? Um, but I think I will focus more on that one, because that one you could touch it without any penalties before you, at the age of 59 and a half in the Roth, and then the other one, the 401k. But it also depends on your income, how much can you put into the accounts. But I think I will focus more, if your goal is 50, to live off dividends. I will focus more on the taxable, not financial advice, of course. You gotta talk to a financial advisor and give them your background and all that. I think that will be best. Um, but the only thing is that, but I wouldn't neglect the 401k. If your job doesn't match, I wouldn't neglect it. And I wouldn't neglect the Roth IRA either. I think the Roth IRA, even if you put some, even if you put less than the taxable, I think it's okay. You know what I mean? I think it's good to have, because to have some investments, that can grow tax free, and you can pull that money at 59 and a half, tax free. I think that's great. I think that's a good way, you know. And it all depends also on your income. Are you hustling? Are you trying to have some side jobs? Do you do something on the side, on the weekends? Do you pick up extra overtime hours? Things like that. I think something that will help too is like, if you, something that I do is like from my side jobs, which I have done a couple times, things like that. And even now, let's just say, this content creation, my YouTube money is not something that I count on for my regular daily things. Like I just have it as a Nope, YouTube money is never existing, right? So every time I get paid from here, which is not much, it's a little bit, right? But it's still something. It goes straight um to my accounts. So if you're skilled, or something like that, like sometimes I have done mechanic work because I know how to do certain things. And any extra money like that, I usually put it on towards um my portfolio. But at 50, maybe some of the guys can give you their opinions. But yeah, but it all depends on your income too, you know. But I would just focus, if you want to retire sooner, in the taxable. Costco pays a $5 plus a year, not financial advice, remember that. A year dividends, but I have to invest $900 plus. I don't see that as a good return. Now, I'm I'm not including how much the stock goes up a year. How much is the stock increase in the last year? So if you see the share price appreciation in the last year, it's actually down 2.6%. If you expand it to the last 5 years, it's up 122%. And in the max, 9,000%. So it still has dividend growth, share price appreciation. I think I would just wait on a meaningful pullback or a correction or something in the market. And 50, you're gonna want to put it in a brokerage account, cause you're gonna need the money to live from 50 to 59 and a half. Remember, you also gonna have to pay for medical insurance. True. Very good point, Fast Eddie. Roth, you can touch what you put in, but not earnings. Yeah. Yeah, but you wanna let it ride until 59 and a half. And if the plan is to live off dividends, imagine, having dividends tax free. I put in 12% into my 401k plus a 5% match. Started at 20 and have always put 10% or more in it. Nice, RM. That's good though. That's good. 12%. Maybe, maybe um if you're planning on, well, it looks like you're putting a meaningful amount. 12%. So, plus a 5% match. That's good, man. That's really good. Depending on the amount that you have, do you want to slow down a little bit? If it, just lower slightly the percentage and grab some of that and put it into a taxable, since the goal is to retire at 50, maybe something to think about. Not financial advice, but you know, just maybe look for some ideas like that. You know, I don't know what your portfolio is, so but maybe just me thinking off the top of my head right here with a little bit of info. I don't like having both Roth IRA and tax. Rather, just have the tax. Makes me feel like I'm losing money by dividing it. Yeah, so like over diversification X. That's what it. Yeah, that's what will be. I guess that's. But if you have time to compound some money into a Roth IRA, I think is very very meaningful. You know what I mean? I think is um. So yeah, I think it's very very meaningful. Um, to grow something in the Roth where you can compound that tax free, dividends tax free, share price appreciation tax free, you know. Imagine holding a VGT until you're 59 and a half, and then you can sell it at 59 and a half and get some dividend paying ETFs or do the 4% rule also as well. Like it all depends on your strategy, but I think even if you put anything, even if you compound $50 a week, I gotta get a compound calculator. But yeah, I got everything: Roth IRA, 401k, and Roth 401 and brokerage. Yeah, me as well. Same here. I do all three. Would drive me crazy. Haha. Now I have a plan. Empty out the 401k prior to taking Social Security, then switch to Roth and brokerage. No Roth conversion dates. Nothing. Just me and my money and minimum tax. Nice. Yeah, but that 1 year taxes are gonna hurt Anders. I think he's probably gonna do it like little by little, right, Anders? If I'm allowed to say, I have 230 in it. That's why I'm looking at maybe focusing on my taxable. Yeah, like 230K, that's what you mean. I'm pretty sure that's what you mean. So RM, yeah, like 230K can compound very, very well into, until you retire at 60 something years old, right? So, you know, I think maybe, this is just my opinion, not financial advice, right? So, you know, learn about the rule of 55, and if your 401k allows it. He's going to need the rule of 72, I think. If before 55, yes, sir. I have enough in my 401k to live from the day I retire until I take Social Security. Yeah, so if you have 230K, and you still have since you're 20, wow, you put a lot of money. And you're 32. Now imagine, from 32 to, yeah, you're going to have a couple $1 million, I believe, compounded until you're 60 something or 60. So that's just that. That's just the compounding of that. So, um, even if you don't touch it and if you put little by little, if you want to retire by 55, maybe, yeah, maybe just lower the contribution, maybe, like if I was in your shoes, I'll probably just lower it and then just put more and more into the taxable. Like that would be crazy, you know? That is gonna be man. That's a very solid portfolio, RM. And nice, man. Nice. That's the good thing about focusing when you are in your 20s, man. The time of compounding is crazy. What about AA? Alcoa Corporation. We'll take a look at it in a second. So everything in Roth and brokerage will have about 5 years to compound. It's gonna double every 7.2 years. Yeah. So imagine that. In 7.2 years, uh it will be like 500K. Then that 500K is gonna double up to like 1 point something million. Then another what is it, like 2 point something 3 million. Yeah, by the time you retire, because it's gonna double up like seven, no, like four times, right? Something like that, 4 or 5 times. Yeah, so you'll retire with a couple $1 million, even if you slow down your contributions. I don't think you should remove them completely, not at all. You should definitely, I can give financial advice, I keep forgetting that. Not financial advice, but if it was me, I would definitely continue taking that match because it's free money pretty much. But I might just, since your goal is 50, maybe lower the contribution, put some more into the taxable, try to focus on that one. Some good solid investments. But yeah, that's very good. Well, on average, I've lived through too many serious dips to count on that. Yeah. Appreciate you letting me share that, Jay. Thank you very much, man. Yeah, no problem, man. You're welcome. Thank you as well, chat. Very encouraging. Yeah, that's what we're here for. We just share opinions, and maybe sometimes, we might have good opinions, we might not have good opinions, but um, yeah, you know, I yeah, I try to leave it as open as possible for everybody. You need to buy a sign, Jay, and put it on the wall behind you that says, "This is not financial advice." Yeah, probably. But actually, you know what I'm thinking, Fast Eddie? Because I was just thinking about it yesterday. Now that I'm off and I'm here at home, like I've been doing certain things, but listening to videos and stuff, not having any work stress or nothing like that. I'm gonna put, which is gonna be like right here, right up here somewhere on this wall. I think I'm gonna put out one of my favorite Warren Buffett's quotes, and I think I'm gonna put it right there. So I do want to do that. But yeah, not financial advice at all. Just friends chatting about good conversations. I appreciate the feedback. Yeah, yeah, that's what I'm trying to keep it in that stream. You know what I mean? Like we're just talking, we just think about it, and let's see, what's best for us. each one of us know what's best for each one of us, right? But getting some ideas from people or some feedback, I think that's very good at times, because that's how I have learned so much. And I spoke about this, I think, last night on stream, that by me being open minded, it has helped me grow significantly in financially, professionally, and personally. Like, it has helped me grow a lot by being open minded. Pure numbers. It'd be better for me to max my 401k instead of Roth 401. Just want my life in my compound in Cambodia to be as stress free as possible. I can confirm retirement is great. Nice, Behold. Yes, I can't wait. Man, and I have a bunch of D&D painting on the wall. Nice. Do it yourself. I must not be a finance bro. Anders, how much less will it cost you a year to live in Cambodia than in the US? Just ballpark. Oh, that's a good question. I think Anders already have everything planned already on that already. Do. Man, the chat has been good today. I honestly thought there was gonna be only like a handful of us again. But there's 12 of you guys there. There is 15 likes. So if you guys didn't hit the thumbs up, don't forget to hit the thumbs up. $5 in chat revenue. Thank you, Madden, man. Thank you so much. Well, I plan on living comfortable, so hard to say. I could do it on 1K a month. Wow. Nice. What I make in dividends right now, but plan on about 2K a month. So you definitely want to have some extra in dividends, for sure, or water. Basically, what my Social Security will pay me per month at 62. Nice. Bitcoin needs to pump. Give it some time, X. Give it some time. Usually, I think it takes like 1 year um, for it. Right here. Sometimes we just gotta, just need a little bit of patience and, you know, usually, yeah, like, let me see if I see it right here. But right here, it was flat 2022. Then in 2023, started pumping. You see, and then in 2024, started pumping again. 2025, a couple months, he was down. Then he pumped again. And now we're in 2026. So just give it a couple more months. Let's see. Fast Eddie, how will RMD affect you living in a different country, Anders? None. Why I plan on empty now my 401k first? Anders got a plan already. But yeah, we just gotta give it some time on Bitcoin X. Oh yes, I forgot you said. Yep. All right. Let me see. Oh, it's 12:30 already. 2 hours already, man. I gotta go do some stuff. And my 401k is tiny, so really wouldn't matter. RMDs are only an issue if you have more than what you want to take out per month. People worry way too much about RMDs. What are RMDs? Can you guys spell that for me? you know, is that medical like medical insurance payments? Is that what that is? Like, I wanna know there in the chat. All right, take care, X. Yeah, it's almost 2 hours, so I'm probably gonna get off right now. Because I do have to go do a few things, and I do require minimum distribution. Got it. Thank you, man. See, I have a large 401k. I am worried about RMDs. Gonna have to do some serious Roth conversion. What you have to take out per year from pre-tax savings. I'm gonna go to Walmart right now. I gotta go to Walmart, a little bit. I gotta go buy a few things. So any Walmart investors, I'm about to or spend it before you're 75. Any Walmart investors, I'm about to go to your business. I'm about to contribute to that revenue growth year over year. Let me see where my portfolio is at on the day. Oh, 42,400. Okay, okay. Has stayed there. Has stayed there. It went down to 42,300 in the day. Yeah, portfolio's holding good, man. Little by little, I've been learning more and more about investing. I feel much more confident now than I used to before. So let's see where this portfolio goes. But um, seriously thinking about doing some reconstitution in my portfolio in the future. So let's see what happens. My SCHD, man, this position right here is really I'm a fan of. So much SCHD. Um, doo, 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 doo. If I spend it all before 75, Irma will kill me. Ooh, Vici is up. Oh, don't woohoo, Anders. Oh, Vici to be down by the time I buy. $26.74, almost at $27. Let me see. Keep an eye for your Pokemon cards at Wally World, Jay. I don't do Pokemon cards, but I do see people making a lot of money on Pokemon cards, so move to Cambodia compound and decline Medicare. Well, make a corporate medical plan. We'll make a corporate medical plan. We are all on, so we don't have to use Medicare. Yeah, that is crazy. Yeah, beachy properties. Netflix. Netflix is the topic right now. Are you still contributing? If so, can you change current one to Rough 401? Yeah, I'm about to go to Walmart. I gotta go buy the oil to do an oil change on my truck. I wanna get all those things done right now that I'm off. While I can. So I don't have to do them on my day off on Sundays. That's what I'm trying to do right now. That's how I'm doing 40K to Roth between my 401 and Roth IRA. Nice. Let me take a look at X. Let me see. Let me. All right, guys. I don't think I have anything else for you guys today. I think I'm gonna get off now. I'm gonna go to Walmart real quick. I'm gonna eat something first, and then I'm gonna go to Walmart, and I will see if I'm able to. I don't think I will be able to do the live stream later on, but if I'm able to, it's gonna be late at night when I get back. So if I'm able to, then I'll do a live stream later on tonight so we can talk about Google earnings. If not, then I'll do it tomorrow, and then we'll go through it. Um, the Google earnings. Oh, did you look at AA? No, I didn't do that. Let me do it real quick before I get off. Alco Corporation, PE ratios at 9, forward PE at a 7, dividend yield 0.86. Price target is 34% upside from here, $62. Oh, wow. Nice. Aluminum materials. Good. Year to date is down 12.5%. Last year is up 50%, even with the decline. Here with the pullback since June. Past 5 years is up 25%. Let me see. Revenue is at $16 billion and growing. Looks it's growing very well. Past couple of years, the revenue looks like aluminum is very much needed. $2.18 billion in operating income. See the net income 2.18 billion. Here's outstanding. They're issuing shares. Why are they issuing shares so much, Michael? $4.84 in earnings per share. Free cash flow is at 303 million. The profit margin 13%. Nice profit margin. And growing. Operating margin 13%. But is this sustainable though? This operating margin? Is it gonna continue to be that way? $300 million. Let me take a look at the balance sheet. $2.2 billion in total debt. Gee. The ratios. Like in A6 price to sales ratio. Okay. Um so payout ratio is 8% on that dividend, which is 0.86%. It has been paying 10 cents. If you see the dividends, you know, I think aluminum is gonna be very much needed, right, for data centers and all that. So it might be IPO day was 2016. I will just look at the. Yes, it has an aluminum mining. Um, that's something that is gonna be needed for you know, for the data centers for all the materials. If it is and the demand is there and they have some good contracts with some major manufacturers, then yeah, this looks good. You know, and whatever else they have contracts with, you know, what else uses aluminum? What else uses aluminum? Totally forgot. With the 7.5 year rule, is that just with compounding and not adding anymore? No, I retired. I think for 5 years ago, wife still works. She makes way too much money, so I can contribute to Roth, and I can't backdoor. Take it all out and move to the Brazil. No extradition for white collar crimes. Had a CEO for a company I worked for do that with a multi-million cash reserve. Wow. I have to hire security so I don't get robbed every day. My wife used to go down there for work and they will have security guards to take them around so they didn't get robbed. Wow. Depends where, but yes. We'll find you concrete underground bungalow. All of the cans. Oh yeah, yeah. Soda cans. They use um LOL. What doesn't use aluminum? Yeah, that is so true. AA just bought another company about a week ago that will add more profit. Yeah, so then yeah, in the material sector, definitely something that is very much that is used for like many different things. Um but yeah, yeah, it looks good. Looks good. I'm hoping the revenue continues its growth. I think that's gonna be good. But a good one in the material sector though. With the forecast too. Look at the forecast. $62. That's the average. Shares fall after announcing 4.1 billion acquisition of South 32 assets. Oh wow. So that's why they have so much debt, since they just had a recent acquisition. But yeah. All right, guys. I think this is gonna be it for today. Yeah, this is gonna be it for today. I got a few things I want to do today. Before I go to the activity later, and it is already 12:41, almost 1 p.m. So, guys, don't forget to hit the thumbs up, subscribe to the channel, turn on notifications, so when I get on a live stream, you guys can join. And even if you stop by, Bull is a lot like AA. Glass and aluminum aren't going anywhere. Coke looks super interesting too. Not KO, but COKE. Nice RM. Nice. All right, guys. So thumbs up, subscribe to the channel, turn on notifications. And then what do I always say? Yeah. I hope you enjoy this one, and I'll see you on the next one.